guys that are joining us, welcome. Glad you're joining for Wise Counsel Live. On last week's call, I mentioned that we would be talking about Social Security today, and we decided to cover tax deadlines instead. So pretty timely topic. We have about 7 days left for most people when their taxes are due to be filed. So rather than doing it the day before the tax deadline next week, we decided to give it some coverage today. So we have about 8 days left for many of you to do maybe a few last minute things. And we would say yesterday is better than today, but today's better than tomorrow. So we'll just go over a few of things that are probably applicable to you. And then we may get into a few things that applied if you're a small business owner. Some of you that are tuning in today are, and some things that might be relevant to you. So we're going to keep it really high level. We're not going to get down into the weeds on this stuff. So with that, we'll just get started. First, we're going to talk about the actual tax deadline, which tax deadlines got moved to July 15th. We'll talk about some exceptions to that just very briefly. What you need to do if you're right now, if you're watching and you're saying, hey, I haven't even started doing my taxes, and I don't know if I can get it together in the next 8 days. We'll talk about how this tax extension and the changes for 2019 will affect that. And then finally, many of you that do get self-employment income, you of course are filing the quarterly tax estimates. Those dates have changed, so we'll just cover those dates really quickly as well. So let's jump right in. Bob, as most everybody I'm sure on the call knows, April 15th is that day that we all are getting ready to try to get our taxes ready for, but they've moved that forward. And why did that happen? Yep. Just real brief. What's going on there?
Well, it's weird because I've filed self-employed for years, and for us, April 15th has always been an automatic file an extension, and push it off till later in the year, as late as October 15th in some cases. And but most people don't do that, especially if they're filing their regular return and it's pretty much just salary W-2 type income. They're pretty much in the habit of trying to get their return finished by April 15th. And so we're all used to that time frame. This year, of course, we've got this little thing called COVID-19, and the world seems to have gone off kilter a little bit in many ways. And so as a result of that, they've given us an extra few months for the deadline. And yet, you can still extend, you can still file an extension by April 15th, just like you could have on April the 15th. July 15th. I don't know if I said that right, but so, it's strange, because normally the summertime is about the time I started sweating bullets and thinking, man, I got to really get that stuff together now. I don't have that much time left on my extension, but now we've kind of got this extra few months, but it's all because of the virus. And this is a one-time thing. I've never seen it in almost 40 years of filing tax returns, anything like this.
Yeah, and that's really something that I've never seen occur, and so it's surprising. But I guess that gives an indication of the significance of what we're dealing with here. And a lot of people are struggling. Maybe they lost their job or they're underemployed, as we would say, and so this helps give some relief. So really, many of you on the call heard of the CARES Act that affected your retirement account. Your withdrawals, RMDs and stuff are canceled for this year. But this extension of the tax filing deadline, I believe, was just something that the president had put forward and kind of requested, but the Secretary of the Treasury approved this. And so I guess they have the authority to do that if he would like to do it. And so, but most of you listening would be considered by the IRS to be what they would call an individual taxpayer. And April 15th is that normal deadline for individual taxpayers. And so if you're one of those, then of course, if you haven't done your taxes, then you would have until July 15th to do those. That's next Wednesday. And it also, that date, moving to April 15th to July 15th, that also got moved for your retirement account contributions. So if you have a Roth IRA or a regular IRA account, if you have an SEP, if you're self-employed, or a solo 401k, those type of accounts, the days in which you can contribute for the previous year, 2019, you actually still can do that for 8 more days. So some of you listening, maybe you have some cash in the bank that it's just sitting there, not earning much. If you're eligible, you could throw that into your Roth IRA or your traditional IRA, and you still have 8 days to do that. So if that's something you might want to do, go ahead and give us a call now. If we need, if you're thinking, hey, maybe I'll do that, and I don't already have an account, there's definitely some pressure for us to get that done here in the next week. But we'll try our best to make that happen. But definitely give us a call today. So this new July 15th day, it applies to you as individual taxpayers. It also applies if you're self-employed, you have self-employment taxes, it applies to that. Your new deadline is July 15th. If you're someone, maybe you inherited from a trust from your parents or someone else in your family, and you have to file a separate tax filing for that trust, or then that deadline also got us moved. So there's some other situations. Some of you are making gifts to your kids, maybe 15,000 a year or so is the number. You actually have until July 15th to file that gift tax return. And if you do owe anything, there's the July 15th is the new limit to pay. So there was no limit on that, whether you owed $100 or $12,000. There's no limit on how much could be deferred. And so those days have all moved forward. But there are a few extensions to that. So, or a few exceptions to that. If you are someone who has a partnership or an S corporation, the deadline for you to file was still March 16th. So if you haven't done that yet, then hopefully I would contact your accountant and get started on that. There would be some penalties and stuff in there. But the majority of people, you would have until Wednesday of next week to get that filed. Bob, I know that we mentioned earlier, if someone wanted to make some retirement account contributions, they would have until the July 15th deadline. Of course, there are some nuances on that. Maybe if they have a solo 401k, for instance, then there would be some deadlines that they would still can make the contribution until July 15th, but there would have been a deadline to set up the account that's already passed. And so I know with some of these retirement accounts, maybe you can think of some other ones to where, there's still a contribution, but someone would have to, have had the account already set up.
Well, it's always best to be proactive on your planning. And here we are talking about it a week before the extension deadline, or the filing, / extension deadline. But yeah, for example, sometimes we have clients, as you know, that might have a side gig where they do consulting. And as we look at their options, we realize, a simple plan would be a better option for them, because they can put in more dollars based on the amount of income they have than an SEP would allow them to. But you can only use a simple plan if you have it set up. I think it's October 31st or October 15th, something like that, of the year in which you're going to make your first contribution. And so if you don't already have it set up, then you can't use it after the fact. You could still set up an SEP plan. And so you could take advantage of that tax filing extension and deadline to set that up and fund it. So that's one of the differences, but you might not be able to put as much in. These rules it's strange how they're not uniform for every type of plan. But
Right.
The ideal scenario is you've already got a relationship with a proactive, good accountant, and you've got a relationship with a firm like ours. And of course, we think the third leg of the stool is a great estate planning attorney. And that way, everybody is not flying by the seat of their pants at the deadlines. We're all thinking ahead and saying, okay, how do we maximize the situation? But every year, we all procrastinate to some degree. And sometimes we meet people for the first time. And you come in and all you can do is the best you can do for that year. This year is unique in that we can fund those IRAs, we can fund those Roth accounts, and we do have more time than normal to fund some of the other types of plans, depending on what kind it was, if it was already set up. I guess the solo 401k has to be set up in the calendar year. So that
Right.
deadline to get that set up would have been December 31st, things like that. I guess that's what you were talking about.
Yeah, exactly. Yeah, there's still some opportunity. Maybe you're someone who has a solo 401k or a simple, or and you'd like to contribute something prior to the July 15th deadline. Some of those you might have the opportunity to do that. The solo 401k, for instance, there's certain type of contributions you can still make um, before the July 15th deadline, as far as being a profit sharing or employer contributions, but the deadline for the employee contributions was actually the end of last year. And so, but there are still opportunities. We can, even today, right now, if you don't have an SEP account, you could set one up today and make a contribution for next year. So there are still some opportunities. If you think that you might want to do that, then please give us a call ASAP, and we can try to figure something out here at the end of before the deadline. Just want to take a second to talk about those of you that, since we are 8 days away, what if you wanted to file a deadline? What does that mean for you? Well, you can file a deadline. It's actually going to move the date out into the fall, and so you would have until then to file your tax filing, but that would not move your contribution deadline. So if, say, you want to you need more time to get your filing in, you can file an extension. But if you wanted to make an IRA contribution, you would still have to do that by next week. And so talk to your accountant, and maybe they can give you a heads up on how much you can contribute, what's tax deductible, or if you want to put money in the Roth if you meet the income limit. So that's something that even people, I think, that are filing for deadlines may not be, or extensions may not be aware of. So go ahead and give us a call with that. The other thing is if you do file an extension, the payment that is due, if you do owe any money to the IRS, you're going to have to pay a little bit more than if you paid today, just because next Thursday on July 16th, that's the first day that the IRS is basically going to start charging penalties and interest on any money that you would owe for last year. So not a huge deal. You can, at least you're not getting in trouble for not doing your filing, and you've extended that, but the penalties aren't massive. And I think a lot of people, knowingly choose to do that just so they're not stressed out trying to get the filing done by the deadline. I know for years I paid some penalties just so I wouldn't, I didn't feel like messing with the quarterly tax estimates, and that seems like a pretty common thing. Just want to pop up, I'll go ahead and share the screen just to pop up some of the deadlines coming up here. Let's see here. These are just some of the things we've been going through and discussing, but you can see down there at the bottom. Bob, can you see that all right? So just some of the things we've been covering, but you can see there at the bottom, if you are self-employed, and this is really getting into taxes that are due for this year. Many of you do that. If you're just doing your taxes now for last year, you may actually have a really big check that you're about to write to the IRS, just because July 15th, you have to pay your taxes due for last year. The first quarter tax estimate is due also on July 15th now, and then the second quarter, and then just 2 months from now, we're going to be getting into the third payment. So although these dates have been moved back and shifted back later in the year, they're all coming at us, and so it's going to be a little overwhelming, I think, for many of you that are self-employed and having to make those payments. So I'm sure, just wanted to give you a heads up on that.
Zach, I'll just interject there. A big part of, I think, the thinking in the administration and at the IRS was when we shut down literally virtually the entire country's economy for 2 or 3 months, this recognition that there's going to be a massive cash flow challenge for people who are self-employed, as well as potentially, more difficult for just individual taxpayers. And so clearly what they were trying to do is give us some cash flow relief here, where you weren't going to get penalized if you couldn't make your first and second quarter payments. But if you have a business, it's not really on our list of talking points, but this is another factor for anybody who might be watching that has a business with employees. There were also some provisions for allowing you to defer the employer side of FICA withheld for your employees. And all of those were done, so we would always defer to your accountant to really get into the details of what you need to do and all of that. But the principle behind it was, look, guys, we know this is hard on you. We realize we're going to do what we can to give you a break here and help you have some maneuvering ability on your cash flow. But eventually, the taxes are going to be due, and I don't know how many business owners really have taken advantage of being able to defer that employer side of the taxes that they normally collect and pay. To me, that would scare me to death, because that would just feel like a big axe hanging over my head if I, as a business owner. But some businesses like restaurants and things like that, they're just trying to survive, so
Right.
that's another factor of this, just pushing this tax down the line a little bit, give yourself more time to figure out how you're going to pay them.
Yeah, and that may, hopefully it's not the case, but that may be a boat that some of you are in if you're running a small business. I know we have talked with several people, that are not immune. There's a lot of industries that have not been immune from the repercussions of having to deal with the COVID and how it's put a limit on some of the business opportunities that people have had over the last few months. And so if you're there, I would just encourage you to reach out to us and your CPA. There might be some options for your business that you're not aware of. And especially if as Bob mentioned earlier, if we're working with your CPA and you and everybody's, there's opportunities that we can find to help that you may not be aware of. And so we'd love to help in that way.
So Zach, as we're looking at these quarterly estimates, maybe an example to kind of put some numbers to it might be helpful. Let's say you've got somebody who's self-employed and they estimate they're going to owe about $40,000 in income taxes and FICA taxes for the year. So normally their accountant might tell them, okay, this year you need to pay $10,000 a quarter on your quarterly filing. How would that end up working for these deadlines in a situation like that?
Yeah. So just to kind of back up, let's just say that, for the 40,000 amount, right, we can assume that maybe in 2019, your business had a great year and the total tax you owed is 50 or 55, right? And you paid 40,000 in quarterly estimates for last year already. So come July 15th next week, you would have to pay the balance due on last year's taxes, maybe 15,000 in that case. Then you would need to pay the 10,000, or actually it'd be a little bit more of that if you ended up owing more tax, but you'd have to pay $10,000 for the first quarter, $10,000 for the second quarter. So that'd be $20,000 that you would be due next week, just in quarterly tax estimates. And then 2 months from now, the third quarter tax estimate would be due. So there'd be another $10,000 then. And so in that situation, Bob, you can see how in the next 2 months, just in the next week, that would be, $35,000 or so in tax payments, and then another 10,000 or so here in a couple months. And that may seem like an overwhelming situation. If someone was in that position and that was something that was going to be really difficult, I would consider, after discussing it with your CPA, maybe doing an extension. Maybe there's a little bit of interest that gets charged on some of those monies that are due, for last year. But that might be something that can get you through until we see sunny skies again and we can get back to normal here with, post-COVID, hopefully soon.
Right. And that's kind of why I thought it might be helpful to put some numbers to it, is to think about it in a very practical way that, somebody might be in that situation. Like you said, they still owe 15,000 for last year's return, but they haven't put anything away for this year yet. And so if you can't do it all, common sense and experience would tell me you'd probably want to prioritize getting last year's paid first. And so if they were able to make that $15,000 payment by next week's deadline, then, generally speaking, they wouldn't have any penalties or interest to worry about. That could change a little bit, but that would probably be the top priority. And then you deal with the first and second quarter, you deal with that later. If you're late on that, you're late on that, and the downside is you pay a little bit of interest. I think they calculate it on a per diem basis, a daily basis, when you actually file your return. And they calculate when it should have been received versus when they got it. And so again, we're not in the business of figuring that out at that level of detail. But the point I wanted to make about it is that sometimes we freak out, right, as people, because, oh my God, there's penalties and interest. But when you actually see it in dollars and cents and you realize it's $100, and I mean, I don't like paying an extra $100, but I've had months where I didn't pay my credit card bill off and I ended up having some interest, and I'm like, I won't do that again, but it's not the end of the world. And so, you don't have to stress out about it is the point. You just do the best you can do. But the worst thing to do is to just fly blind and not know what's going on. You need to at least know the situation. And that's where we, again, just always point you back to your accountant and make sure you're being proactive about those discussions so you don't get blindsided and not know what's coming at you.
Right. Yeah. And with that said, those of you that are listening, I'm sure you guys, there's many different situations that are represented by you guys watching. And so whether you've already got your taxes done, or and maybe you want to take advantage of the ability, the week that we have now to put money into your Roth account, even if you've already filed your taxes for 2019 and you're eligible to make a Roth contribution for 2019, you wouldn't need to refile or amend your tax return. You can make a Roth contribution after you've already done your filing, and it's just the same. So maybe you want to take advantage of that opportunity, or if you haven't filed, and we had a situation recently where someone hadn't been filing their taxes because their accountant had retired. And so we were able to refer them to, and they couldn't get a hold of them, I think was the main problem. So they weren't aware that they had retired. But maybe you're in that boat where you don't have an accountant, you've been filing your taxes yourself and you'd just like some help, or maybe you're trying to get it done extra quick this year. If you don't have a CPA that you're working with and you need one, we do have many people in different areas that can refer you to that can help. So reach out to us and maybe we'll give you a few options of people you can contact to see who is the best fit for you in your situation. But we'd love to help out however we can. So that's pretty much all I had for today that I wanted to go over. Bob, any last minute thoughts?
No, it just why don't you tell us what we're going to be talking about next week, and then we'll wrap it up.
Yeah, so we put a hold on the Social Security discussion mentioned last week. We would discuss that today. We pushed it to next week. So Bob and I will be on here talking about some of the more relevant topics for those of you when it just comes to think of it as Social Security 101. Maybe you haven't filed yet, or you're 60 or 62, or maybe you're 65 and you're wondering, should I file now or should I hold out till 70? What are my options there? So we'll be talking about that stuff.
Yeah, look forward to it. Well, thanks, Zach. It's always good having these chats, and I guess we're done.
Yeah, we'll wrap it up. And if anybody has any questions, as you know, if you've been watching, we're not able to take those here on the webinar, but shoot us an email or give us a call, and we'd love to talk with you. You guys take care and enjoy the rest of your week.
Have a great week. Bye.